and what they're working on, and there's the newer trader. And the newer trader has just come up with one thing. I started with one thing, and I have done podcasts on what that was in the past. I used to look at Fibonacci retracements that lined up on multiple time frames, and I would watch them work. And then when they would come up a second or a third time, everyone would get stuck, and I would go into that pressure because I knew everyone was relying too much on technicals and they were stuck. And that was a little thing I did during the day. I'm not sure that even works that great anymore, but 10 or 15 years ago, it worked really good for a while, and then I figure out something else. Failed head and shoulders patterns. I used to love those. I like the failures more than the real patterns. But even that's just index trading during the day. There's something for everything, right? And I'm looking more at stocks now, and I'm trading some earnings stuff, and there's a whole set of peculiarities and things that do and don't work in that world. And so we all have to go through that when we learn something new or we learn something from the start. It's a different exercise, but it doesn't negate this other stuff, which is kind of the game. Everything turns into the other stuff eventually. If you get through the first hurdle, you're going to be working on the rest of your life on preserving your energy and striking while it's hot. And the better you can do that, the more money you'll make. I usually don't like to come on unless I feel inspired by something. So today I feel inspired. I'm reading The Battle for Investment Survival by Gerald Loeb. It's an old book. I think I said his name right. It's in the 70s. He has another book too that's kind of hard to find, but you can get it on Amazon. I'm going to get that also because so a couple themes here on this podcast. First of all, I'll talk about my individual trading, and then I'm going to talk about how I'm trying to grow and get better and get bigger, more scalable and all that stuff. And then I'll talk about connecting with the right people and I think I call it energy, but it could be whatever you want to call it. The right vibe and there's so many people who, well, not so many, but there's people who make money doing different things. Probably so many people who don't make money, honestly, but people who are doing different strategies that could be successful. But do you relate to them? Are they ever going to work for you? And you can think about that in terms of athletics or coaching is good. Like if you think about Bill Belichick and how he generally, the football coach, the NFL coach, he reacts to the other team a lot in terms of how he doesn't just come in every game and do the same thing. It's what are my players good at? What is the strategic opportunity versus the other team? And how can I create a game plan to maximize my talent, but also take advantage of what the other team has? Other people just have this mentality of we're going to do what we're going to do and get really good at it, and you try to stop it. So it's predictable, but it's very solid. I like the Belichick approach better. There's no right way. It's just I think you need to constantly be adapting to the environment. So that gets me back to this Gerald Loeb Battle for Investment Survival book, and I know it's been around forever. It's just one that I haven't read, and I read so many of these books over my career. Not a lot lately, and honestly, not a lot in the last 5 or 6, 8 years even. But lately, I'm kind of just enjoying going back over books I read in my late 20s or early 30s, just because I have so much more experience now, and they mean different things to me. So. And I have just a big growth push right now on expanding myself and with all this stuff. And sometimes you just trade for a long time and you don't think about that. And other times you're really in the mood to do that. So that's where I'm at. But back to the book. I really relate to the way this guy is looking at things because it's similar to me. And what I mean by that is he considers his account, he calls it the ever liquid account. So it's basically, I'm going to trade everything in this account. Sometimes I'm going to be all cash. Sometimes I'll be all stock. Sometimes my trades will be 3 to 6 months. Sometimes they'll be 3 weeks. Sometimes they'll be during the day. Sometimes it's futures. Sometimes it's not. It could be anything. And this to some could seem like jumping around. And I think if you're new, this is a horrible idea because you need to get good at something first. The longer you do it, the more you get good at. Like I spent a decade or more trading nothing but short-term S&P futures and equity futures and then a little bit of fixed income futures on events. So I learned that inside and out, and it's still not always easy, but I learned, I wouldn't call myself an expert at anything. That you can never be an expert at this, but I guess relatively speaking, I am an expert at it because I spent a lot of my life doing it. So in that way, I feel like I have an expertise in that particular area. So when the market's busy and it's volatile, you're going to see less algorithms and computers making it miserable, and more flow because more people are panicking, finding opportunity, moving money, and you can see that in the order flow and the chart patterns. And the moves are exaggerated, they're large, there's news that moves them, and all that stuff feeds into the person who spent a lot of time studying how to do that, which is what I did. So right now that's kind of happening more. Less so the last few days, but generally the whole year has been like that. So the last 10 years, we haven't had a whole lot of that. We've had pockets of it, pandemic, 2016, 2018, we have pockets of it, but it hasn't been a good short-term traders long short type environment. It's been a lot of long only, swing trade long, earnings winners long kind of environment. That's what most people are bred to do, and because the market usually goes up, so that's not a bad idea to have those strategies. But a lot of people can't trade around that very much. So back to the book, it made me feel at home. And a lot of times I'm struggling because I've traded for so long, but I've accumulated money now. I have more money that I've made than I need to trade my strategy in futures. I don't need a lot of money to trade futures. It's a very leveraged account. I have enough money that I've made that I don't need to trade it all in stocks either. So then I'm thinking, okay, I need to have a money management strategy or a wealth management strategy around holding stocks longer term, and I get all twisted up, and I've spent years trying to learn like much longer time frames and things like that. And when I read this book, it really clicked with me. It's like, well, I don't need to do any of that. All I really need to do is have an ever liquid account, which can be anything. And when the market's moving up and I go to my earnings strategy and I go to, I don't know, momentum plays and things like that I work on, which I'm not as comfortable with as this futures stuff right now when it's busy. But I have spent 4 or 5 years learning that stuff. And I'll throw a few resources to you if you're interested in earnings winners or long only trades. I'm a member of StockBee. I was a member of Jesse Stein's group for a while. He has a book called Insider Buy Superstock, which is really good about earnings winners. This guy, Lone Stock Trader on Twitter, his name is Fred. He's become a really close friend of mine. He has an earnings winner course. So I gobbled up all that information over the last 4 or 5 years. And through it all, StockBee has something called the Cinderella strategy. I think you can Google that. There's a video on YouTube. Through it all, I've kind of pieced together ways that I can use what I already knew, plus things that I've learned from all these people, and put together an earnings strategy, which is a very good long-only strategy for earnings winners. But then the thing is, it's great, you can do that, but can you do it at the right time? Can you not get hurt and do it when it doesn't count? Like right now, where it's not working as well. You need to save that for the right time in the cycle, and it can do phenomenally well. But other times, it's utterly useless when the market's going down. And then you go back to, for me, my training in futures, which is kind of the first thing I did. And I've picked up, there's other trades I do too that maybe don't fit neatly into a box, but generally there's things that I can do well. And since I've been trading for almost 20 years, I've developed and spent a lot of time on a few of those so I can move from environment to environment and feel comfortable. I don't have to put myself in a box of only doing one thing. If you're newer, I feel like you have to start learning something. You have to start figuring out something you can lean on. And that's what you're doing. That's what you're doing right now, probably. And I think a lot of you, I can't speak to everybody, but I've talked to a lot of people, really got comfortable with the long only environment and swing trading and things like that. And that'll come back, and that comes back even in waves. It came back for a few days here. But in this environment, it's different, and things that worked will stop working, and you'll probably be forced to come up with a different strategy. And on your journey, I don't even know no one's going to give you the answer to what that strategy is. But along the way, you find things and you find people who jive with how you're doing things, or it feels like that's the way you want to think. And when I read this guy from the Battle of Investment Survival, I love the way he did things with his account, because he has this account and he can do a variety of things in it. I thought I had to have separate accounts, and I got myself really clustered up in the head trying to segment everything I'm doing. But really, I just need to do the right thing where it makes sense. And it's very complex, but also very simple. So right now what I'm doing for growth, on the growth side of things, is I know the futures thing, I can just go to that whenever I want when it's busy. It's kind of like autopilot. Doesn't mean I always make money, but it means that I just kind of know what I need to do, and I know what I need to wait for, because I spent so much of my life doing it. But there's other things that aren't like that. So the earnings strategy I'm newer at. I've made some money on it, but it's not as dialed in as the other stuff. So that will be a work in progress. I'll continue on. Then there's other trades that I like. I can get into this more later. This might be something for the paid podcast or something to put in print, but I've studied market breadth a lot, and I use the NASDAQ McClellan for market breadth. And I like to really look at when there's stupid news or when we're really getting beat up sentiment-wise, and then we have the breadth that's been kind of churning sideways for a while if you're getting beat up. And a lot of times I choose to go long at those times. It's a little bit of an art form. I can articulate it better with examples, but we had a recent example, which was getting beat up quite a while. Then we had that monkeypox day. And that monkeypox day was, I thought, stupid news. And on top of that, the breath had stabilized a little bit before that, and that was a day where it kind of dipped back down. Actually, the Snapchat warning was a day it dipped back down after that monkeypox stuff, and I felt pretty confident that we needed a rally because if you sold, you probably already sold on a lot of those headlines. And I also like that the monkeypox tied into the pandemic, the COVID fear, so people were kind of overreacting because of what we just went through, which makes total sense. So things like, I do a lot of trades like that where I can think through the positioning and if it lines up with the breath. So a lot of times on some of those down days at the end of that move, the breath wasn't that bad. And it was the big stocks like Apple and AMD and Nvidia that were going down. And I kind of felt like, okay, they've sold all the other stuff, 70%, the software stocks that were overvalued. And now they've sold the good stuff that's broken down. And we get this panic news. So if we're going to rally, it's probably going to be soon. And then the timing is figuring out how to get in and then using your technicals. And that's more of a discussion that's more of an intimate discussion probably about how to do that. But that's the general thinking process. So, that sums up a lot of how I think and how I trade. And anyways, back to the strategy. So there's the day trading for me, there's the earning strategy, and then there's things like I just described that are, I don't know, it's just thinking. It's second order thinking what other people are doing, knowing where the big levels are, things like that, and just watching it happen over and over again, and then developing a little bit of a plan. It's almost like we're all artists, and we're applying our art to the market. And when you read or follow other people that have art that rhymes with yours, sometimes you can learn something from them. And you're never going to have the same strategy or the same style, but you can learn something. So I read this book, and it made me feel at home because it made me feel like, oh, it's okay to be the way I'm being. I don't have to have 5 accounts. I don't have to make it really complex. I can just settle down and pick the right thing for the right time because I've been doing it for a while, so I have different strategies for different environments. I just need to do a good job, like a good coach would, of saying, okay, this is the environment. This is probably the best strategy. And then it can switch quickly. It could be, oh, we have a Fed day, so it's probably going to be a futures trading day. But it also lines up with what could be a good time to buy things. So I have a little bit of one foot in both sides where I'm trading on the short term, but I'm also looking at potentially buying some things I have my eye on that maybe had good earnings because I feel like we're near a turning point because of X, Y, and Z, whatever. That complexity is not those are things I never thought about in my 20s, even early 30s when I was trading just futures. I never had an awareness of the bigger forces. I just did what I did and it worked well. So simplicity works. And having one thing and then adding 2 things, it works. But as you get going longer, you add more and more things. And then you've spent enough time on each one of them that you start to rotate between which one fits at which time. Just like a coach would say, we're going to change our defense. Even though we're really good at this is probably going to work better against this team, and we're good enough at it that I think it's better than doing what is predictable. And, whatever the thinking you want to apply is. So I guess I would say, to sum this up, when you're going over people or listening to people or reading books, to find things that jive with how you feel like you want to be. Even if you don't know how you are exactly because you're newer, or maybe you've been around a long time and it's kind of like you're a kindred spirit with someone else, but you can learn a lot from people who are thinking similar to you. Now, I know in business you can learn a lot from someone who's thinking very different than you because they can balance you out. But in this case, in trading, I don't think that makes as much sense. Maybe if you're running a big fund, it would be different. But if someone's a value investor like Warren Buffett and you're a momentum trader and a quick twitch person who can't take any heat and doesn't want to hold things overnight, that's not really going to be a good match for you. It doesn't make any sense unless you make enough money where you feel like you need to learn the other stuff also, which is different. So I'm venturing into some different stuff, but I'm certainly not Warren Buffett. So for me, it's like, okay, holding something for a few weeks was a huge deal before, then a few months. But a lot of times right now, it's just it could be a few minutes, a few hours, not even hours. So don't put yourself in a box or worry about that when you're new. Learn 1 or 2 things, get really good at them, study the examples of the winners over and over, be able to articulate them to an 8-year-old very simply. Why are you doing this? Where are you wrong? maybe if you get out and it does something else, you can get back in again. There's no shame in buying lower or higher. And the faster you cut those losses, the easier it is to just clear your head and get back in next time. And the more you hold stuff, because of your original analysis, the more you are paralyzed. And if it shakes you out and goes back, you are mentally unable to get back in because you just took such a big loser. So always panic first. Just basic stuff, but you go through it again and again, and you just these old things that people say are true, and you have to feel them for yourself, most likely, to really understand it. But intellectually, we all nod our head, yeah, I get that. But once you do it enough times, you have a scar. It's like scars on the soul, I call it, where you just know that I don't want to go there again, and I've done that before. But yeah, so the book really, I'm not through the book yet, and I actually ordered the other book the guy wrote, so we'll see how much more I pick up. But just to elaborate a little bit more, maybe what I'm attracted to in the book is, besides the account where you can do anything you want and adapt to the environment, it was just like, it's the way I trade. It's cut those losses quick, buy stuff that's going up, sell stuff that's going down. If something's really cheap and it's probably going to get cheaper and then eventually go way up, that's fine. But if it's going down, I'm wrong. I got to get out. And then when it turns around and sets up a good pattern and I have all the reasons why it's cheap or why I want to buy it, when it starts acting better, I'll buy it. But I don't need to sit there in front of it and have it be dead money for 3 months. So I've developed a lot of ways to figure out when it's going to move right now. I want my stuff to go my way immediately. And I have a very low tolerance for taking heat. I don't like taking pain. And that's for every time frame I'm in. So it seems maybe unrealistic to say, oh, you're going to hold something, Brad, for 6 months or 3 months, but you don't want to take any heat. That's exactly right. That's why I try to enter on stupid news, or I try to wait for an earnings catalyst and then a pullback to a safe area, or buy a breakout when all these indicators are saying that it shouldn't break out, but it does anyway. Things like that just go right away, because I'm not built to sit there and watch things go 20, 30% against me and then eventually work out. That's not my strong suit. So I have had to build things around that, and that can work for multiple time frames. And I felt like this fella is similar, and I can pick up some things from the book because it's going to be naturally easy for me to go in the direction I'm already going. And that's what this was doing for me, versus, buy something that's, I don't know. It sounds silly, but it can happen during a 2-minute chart as well as it can in a 2-year chart. It could be some of my worst days back when I was starting would be, I could smell a huge turnaround coming, and I was a day early or even 4 or 5 hours early during the day, and I got killed, and then it flipped and turned, and I just sat there paralyzed. I'm sure we've all been through that. And so a lot of times I've learned to, and Brent and I will talk about this on the paid podcast, which, by the way, is pretty much ready. So we'll start that, I believe, next week. But it's one of those things where you learn that during the day, the market move is going to happen probably on the open, on a big event day, or not necessarily a big event day, but on the open or at the end of the day, the last 90 minutes or the last hour. So if something's brewing, that's probably when it's going to happen, not really during the middle of the day. And when I was younger, I would always be grinding and chopping through the middle of the day, waiting for something to develop that I could smell and see. Or I'm even a day early sometimes. And now I've gotten much better at just kind of dabbling and waiting and being really small, taking a bunch of paper cuts, and then knowing when it's probably going to happen if I'm correct, and then really stepping into it at the right time. And that's just experience. But that timing thing is very, very important. Like, when do things move? Why do things move? So you can be right, but everyone else is right, but the positioning's not right yet. So studying those things and in your own trades and figuring out like what makes it go. That's kind of how we figured out. Brent and I do a lot of stupid news trading because there's a trend, especially if it's early, and then it has a big pullback on something that's really unrelated. And then the snapback from that is usually violent, and then the resumption of the trend and a new high. Sometimes they happen at the bottom, like the monkeypox thing, against the news, stupid trend, or stupid news, against the trend, stupid news, sorry, like that, are a little more dicey and choppy, as you saw with the bottom, but are generally pretty reliable as well, because that causes panic and selling at bad times, and eventually people feel stupid 2 weeks later for selling on monkeypox, which you can see now. It doesn't mean we're not going to make a new low again. I prefer it when it's with the trend, like a yield curve inversion.